Last week, we talked about the tax traps we see retirees face and introduced the Roth conversion strategy. Today, we're going to break down this strategy further and look at a real scenario so you can see what it could mean to you. If you're currently sitting there with the bulk of your assets in tax-deferred 401ks or traditional IRAs, this episode is specifically for you. We want to help you avoid those tax traps and put you back in the driver's seat with good tax planning. Now, before we get too deep, let's establish what a Roth conversion is. It's a strategy designed to help reposition tax-deferred dollars to a tax-free bucket, where it can continue to grow for both your benefit later in retirement, as well as those that might come after you. This strategy can be a great tax manipulation tool for your own retirement, as well as an incredibly valuable legacy tool for those that want to leave money to their kids or grandkids. Going back to what we talked about last week, running a lifetime tax projection is a great way to better understand your future tax obligations, as well as identify opportunities for tax savings through strategies like a Roth conversion. Now let's look at the components of a Roth conversion. The first thing that you need is a bucket of tax-deferred dollars. This could be your traditional IRA, this could be a traditional 401k, 403b, maybe it's your thrift savings plan. We just need that bucket of tax-deferred dollars. Then the next thing we need is a Roth IRA. We want dollars that we're going to convert into that tax-free Roth IRA. The last thing we need is a tax trap to avoid. We talked about these last week. Maybe it's a required minimum distribution that's coming up down the road. Maybe it's you have too much income and you don't want to have to pay more for your Medicare premiums. We need some type of issue that we're trying to solve with that Roth conversion. By looking at somebody's lifetime tax projection, we can identify what those traps are and begin to position our Roth conversion accordingly. Now let's put some real numbers to this. In this example, we have a couple who are both 62 years old. They did a great job saving and have amassed about $1.2 million in their traditional IRAs. Again, this could be a 401k, 403b, or some other type of tax-deferred qualified account. Now this couple just retired and they have minimal portfolio needs, because they have a pension and Social Security. But also they have some after-tax dollars to help them get through the next few years of early retirement. Now, because they are using these after-tax dollars to fund the start of their retirement, their taxable income is incredibly low. While some may view this as a big win, I would say it's more so an opportunity you really do not want to waste. You see, for this couple, their lack of a need from their portfolio means these dollars will grow and grow and grow, which we absolutely love, but what we don't necessarily love is that each additional dollar of growth is taxable in the future. And we know that within that account, whether it's you or those that come after you, the IRS is still going to get their tax money. So when we look at that lifetime tax projection, we can see that their taxable income spikes at age 75. You can see it here. The reason is because they have officially reached the age where the IRS forces them to start taking their RMDs, required minimum distributions. If you're unfamiliar, RMDs are an annual dollar amount that the IRS requires you pull out of your tax-deferred retirement accounts so that you can pay some taxes on it. What we really want to do is take advantage of this tax valley that we see before age 75 and see how much we can save these clients in total lifetime taxes. So now that we know what a Roth conversion is, and we know why we should be looking at it, let's build it into this plan and see what kind of impact it can make. For this specific scenario, our target is to max out the 12% tax bracket. We ran through the numbers, we tried the different options, and it really came out best that the 12% tax bracket makes the most sense for them over the rest of their life. The target can be different depending on your entire situation. For some, it's a specific income tax bracket. For others, it could be up to the IRMA limit, so you don't pay more in Medicare premiums. Or maybe you have an after-tax brokerage that you plan to use in early retirement, and we want to make sure that the capital gains are taxed at 0%. These are great things to review with your financial planner to ensure you're making the wisest decision based on your very unique situation. For our clients here, our target is that 12% income tax bracket. Now let's see what that impact looks like. So you can see on the lifetime tax chart that we are paying a good bit more in income taxes now. But also look at what happens to that tax spike we saw before. Now it's a smooth line, meaning we're able to avoid a lot of those additional taxes. The benefits for this Roth conversion don't stop there. You can also see on this screen that we generated several $100,000 in additional tax-free assets that they can pass on. Now, all of this made possible because we didn't just aim for the lowest annual tax bill. What we did was we strategically planned for what life has in store down the road. Again, anything we discuss here is not meant to be taken as advice for you and your own situation. Everybody's situation is incredibly unique. There are a lot of variables at play, and we want to make sure that every person has a strategic tax plan built for them. If you want to see if you're standing in an opportunistic tax valley right now, or maybe you're still working and you want to get a head start on planning for taxes in retirement, go ahead and reach out through our website, landingpointfinancialgroup.com, or drop a comment on the video. We love sharing these great tax strategies, and more importantly, we love implementing them for clients. Our goal here at Landing Point is to do this financial heavy lifting for our clients because for most, crunching the numbers on taxes and reviewing their cash flow is not something that fills their joy cup. We do what we do to help people make the most of their time and live joy-filled lives on their terms. Thanks again for jumping on here and watching this video. We would love it if you gave the channel a like and subscribe. Until next time, I'm Garrett Borbina, and this is the Retirement Switch.